all the loans during this period of time went to foreign banks. And at one time, at the peak of this, 88% of these overall discount window loans went to foreign banks. And then, but at the New York Fed, I think practically, essentially 100% of the loans were going to foreign banks. And the answer I get is that, you know, they're foreign banks, but they have subsidiaries, and they qualify under the rules. I wouldn't say the law, but under the rules that they can go to the discount window. But it just seems to be way out of proportion when you think of that tremendous amount of loaning that went to these foreign banks. And this is not easy for the average American citizen to understand. Could you enlighten us on why it seems to be disproportionate? I'm sure they don't represent that percentage of the financial problems that existed. It weren't, you know, a third of the problems didn't deal with foreign banks, surely. But what is the explanation for that?
Yes, Chairman Paul, thank you for that question. First, the starting point is federal statutory law. In Section 13, Paragraph 14 of the Federal Reserve Act says to the Federal Reserve that with respect to discount window borrowing, we are to treat the branch or the agency of a foreign bank just like we treat our own U.S. chartered depository institutions. So there's this principle of national treatment that we start with, and it's a principle that is embedded in the Federal Reserve Act itself. And so we must treat the branch and agency of a foreign bank in the same manner we treat our own. So that's the starting point. Second is New York is the money center of the United States. And with respect to foreign banks that intend to come to our country and invest in our people and form branches and agencies in the United States, many of those foreign banking organizations look to form those organizations in the money center, which is in New York. So the short answer to your question, Chairman Paul, is the law requires us to lend to branches and agencies, and with respect to New York in particular, that tends to be the place where foreign banking organizations enter our country.
Okay, proportionately it still seems to be out of whack. But when the system invite foreign banks, you know, they're making most of their money overseas, well, just open up a subsidiary in New York, and therefore they get the line of credit and the protection of the bank, and it's sort of almost like free insurance for them. And do you think this is a good idea, that a foreign bank, all they have to do is open up and get these bailouts? I mean, it just doesn't seem fair at all.
Well, these were loans, Chairman Paul. They weren't gifts in any way, and the foreign banks have to repay just like everyone else, principal and interest. Second, if a foreign bank, and some do, decide that they would prefer not to form a branch or an agency, but to start a subsidiary bank in the United States, that is their option, and some foreign banks do just that. And of course, the subsidiary bank, which would have a U.S. charter, that has access to the discount window as well.
So I'd add one more thing. There is a limit on the amount that they can borrow. They're limited by the amount of collateral that they have that they can post at the discount window. So that's dollar collateral in the United States. That doesn't allow the foreign central bank the foreign bank to borrow to the full extent of its assets worldwide. It borrows in order to support its dollar activities. And those dollar activities are largely, though not exclusively, you have a point there, but largely in the United States.
Could the argument be made that maybe the banks in Greece should have had a lot more subsidiaries in New York, and maybe then Greece wouldn't be in so much trouble? The Fed would have bailed them out too.
No, they're still, their assets are in Greece, and they're Greek assets, and they would go to the Greek central bank to borrow there, not to the United States.
Okay, Mr. Green, do you care for another series? Okay, Mr. Jones, for 5 minutes.
Mr. Chairman, thank you again. I, looking through a lot of these reports, and I want to go to Libya and see if you can help me understand the rationale by the Treasury and the Reserve. I'll just read one paragraph. Arab Banking Corporation, the lender, part owned by the Central Bank of Libya, used a New York branch to get 73 loans from the U.S. Federal Reserve in the 18 months after Lehman Brothers Holdings collapse. Help me understand so that I can explain to people back in my district